Let's go. Obviously, before this video begins, remember that this is only my approach to investing in this specific equity, and nothing you hear should constitute financial advice. You know the drill. So it is, futures are trading right now. This is the week going into, dude, I don't even know the date. September 19th. Yeah, it should be an interesting week. What I'm going to be doing is making my weekly forecast, just so we can kind of have a little roadmap of what I expect GME to do this week. Obviously we can build off it and check back in as time goes on. But without further ado, let's see. So a few videos ago I outlined this level right here, the 215.39 area. This would be the one-to-one extension of A to C. It'd be A here, B here, C up here, making a bigger B wave within this wave 2 correction. Now, don't hate me. I'm just saying how this is supposed to. It's supposed to go is the wrong way to say it, but typical Elliott wave zigzag would have. We would expect a one-to-one extension for the C wave down, because the way I see it, this is an A down, B up, and a C down. Now, another way to interpret this would be this whole move here is a wave 2, and then we'd have a 1 up and a 2 down before exploding. So I don't really have a preference. We'll see as time goes on, but the reason I'm inclined to say that this is still part of a larger correction, which visualize would be kind of your A down, B up, and if we hit typical ratios, we'd expect to come back down to here. But that's 40 odd points from where we're currently sitting, so I don't know. That's a bit of a stretch in my opinion. So these levels here, 183, 174-ish, and 162 are, most common retrace targets. But I'm also going to take the approach that this is a wave 1, and we would expect a pretty deep correction before exploding into the next move. So either way, I do expect a bit of downside early into the week before, doing our thing. I'd also like to draw your attention to time extensions. So 9:20 and 9:23. 9:20 being tomorrow. Again, these are just potential turn dates. But don't pay too much attention to those, because we did satisfy a time extension here at the 0.236. Your wave 1 up, and then we'd expect wave 2 to correct to the downside, and we'd expect to hit one of these time extension ratios before beginning the next impulsive wave to the upside, being a wave 3, which should in theory explode. Right, downside targets first. So let me draw fibs from the low here. 0.618 would be most common wave 2 target at 192. I do think we'll see this pretty early in the week. And also tiny little gap, just worth keeping an eye on down here. All right, this little green box. So this is right underneath this level as well. We'll see. These would be the fib levels to watch. I would expect anything under 0.382. So let me remove the upper curves. Right, so these would be, if we bounce to any of these levels and hold above this low, then the way you would look at it, or I would look at it at least, is this is a 1 up and a 2 down. And let's zoom out a bit. I'm gonna go to a default count. Wave 1 up, 2, and then assuming that this is the low of wave 2 is in, which again, I don't really have a preference. We just have to see where we bounce at. But if it moves in typical wave fashion, it would be 1 up and then 2 down to here, and then explode. And the big pennant flag, whatever you want to call it, supports the idea that we're due for a massive break soon. If you saw my last video talking about the AMC comparison, that has me jacked up, very, very jacked up. But again, yeah, so these will be downside targets here. I'm watching this level specifically, 192, 193, and then this little gap right down here. So 190-ish is first strong bounce candidate. Obviously, if we do break out of this triangle, then it's game on. And I think the resistance comes at the 2.8. Yeah, but the thing is, it's converging as we come down, if we come down lower. And so with a 1 hour view into tomorrow, it's the 214, 215 area. We can break above that. Obviously, it's off to the races. But taking a really basic technical approach, let's just, look at basic support. Upward trending. I mean, you can make an argument that we've held this support pretty strong. And so in that case, we keep trudging onward and say we break here or the next day. Just have to keep a close eye on it. Upside targets being, break out of this 214, 215 range. Then let's draw some targets real quick. So we'll get rid of this. Extensions. So remember, this is a wave 1 up and a wave 2 down. Assuming this is the low right here, and then we're not due for more downside. Again, it could go either way, but I'm taking the more bullish approach short term. So that would put targets at, let's erase the 0.618, 0.786. And first target being 263, higher end being 317. And if we replicate this move here, we hit the 2618 here, a little bit past it actually. So that would be 403.45. So again, we just have to watch and obviously see what happens. Just give it a bit of time. This upward trajectory is convincing though, because you look where we bounced on Friday, and we held the line. We held it pretty well. We didn't dump through it. If we do, the downside targets, 192-ish being the area I'm really looking for. And let me draw out time extensions again, just so you can kind of see where I'm coming from. Low to high. And you see, this is why I think you can make an argument that the wave 2 after this move is already complete. And if we take fib retracements, that also supports the argument. And I've said it time and time again, 0.618 is most common wave 2 retrace, and bam, ticked at the level a few times, never closed below, and we've been trending upward ever since. So too early to call anything for sure. This right here is promising though. It's I like what I see. And historically, the 0.786 date has been has usually been the turn date for GME. Looking at it historically, I've shown this a few times, but to anyone who hasn't seen it before, looking at this run, here to here, 0.786 marked the low, and a lot of sideways shit, but it did mark the low. And again, here, right? Same thing, 0.786 marked the low of the whole move. So if history does repeat itself, that's the thing though. We would expect kind of more retrace action, setting a low around here. I don't know. I really don't know. It's the way this wedge is set up is really promising to me. And obviously with everything that's going on in the broad market with Evergrande, there's an ethics review going on with big banks, which is, naturally they're going to sell the peak. They always do. Futures not looking good. Down 18 points so far. I don't know if broad market has started to freak out yet. I think sentiment is still buy the dip, but the market makers, they really want to instill this buy the dip mentality, and so everyone will just continue to buy it, and then obviously it'll just keep on dipping. So I think that's what's coming. If not, we're there already, because if you look, even just taking the basic approach, we broke below this channel here, which is I see this as an ending diagonal. So 1, 2, 3, 4, 5, and then down we go. Same thing can be said about Apple. I like to watch Apple as a indicator for overall market health as well. Just blue chip stocks in general. Ending diagonal here as well, right? 1, 2, 3, 4, 5, literally to the tick, and now look out below. And so just using this and other blue chips, Microsoft. That's not Microsoft, right? More or less hit my level. Facebook is close. You could argue it. We were missed up by $2. Nvidia, you have broad market looks like it's more or less topped out. So let's look at the VIX. The VIX is basically just inverse SPY, but even taking a basic technical approach on the VIX, it looks like this is about to go stupid to the upside. When this breaks out, whole market, volatility is through the roof. Usually stocks drop because it's basically SPY puts. It's kind of how it's calculated, more or less, which is good for GME. Very good for GME. if you want to see like how I think the overall trajectory will go, if we do see a fake squeeze, I recommend you check out my last video. I kind of went over targets with that. But to wrap it up, downside I'm looking for is 192-ish. If we do break to the upside above 215-ish, then yeah, I'd say it's on. But I'll leave you with this. Let me remove this time extension real quick. Let me just remove all of them. Don't need these. I will say watch for rejection at any of these levels. 219.79 and 223.5. If we do reject any of those, I would expect to see a little bit of downside action. But you know, I'm just so zen to all of this. You know, it'll happen when it happens. Just let it happen. I do think markets, quote unquote, crashing is a good catalyst for GME because it's historically we've seen that there is like an inverse correlation between the two, GME versus like the broad market. So again, you know, we just need to let it play out and watch. But this support is really convincing to me. We'll see. Let's just do a basic, you know, look at indicators. I don't like to use indicators. I think price action is what's most important. Everything else is kind of just noise. I do have a short signal on the 4-hour, but it's, yeah, I don't know. Take from this what you will. This is kind of a bearish indicator, but again, I don't really like to use this with GameStop at least. Other stocks, yeah, it helps, but this is, you know, I can't really draw any sharp conclusions from there, so I just like to take the wave approach. Without a doubt, the overarching setup is bullish. Let me pull up my larger count. Yeah, sorry about that, but this would be, have I even updated this actually? Well, anyways, 1 2 1 2 1 2 1 2 3 of 3 of 3 of 3 tsunami explode. And obviously, you know, everyone will know when we are exploding, like we'll know, but until then, just let it happen. Thanks for tuning in. Again, this always turns out to be longer than I want it to, but hopefully you got something useful out of it. See you guys on the battlefield. Peace.